In today's video, I will tell you the correct way to draw support and resistance levels. Support and resistance is an amazing technique used in technical analysis, but still, most beginner traders use it incorrectly, due to which they have to face heavy losses. So, without wasting any time, let's start the video. As a trader, support and resistance are very important for us because when price approaches these levels, we get high win rate trading opportunities here. For example, on our chart, we can have an area of resistance because the price goes up, hits a specific level, and comes down. If the price approaches this level again, there is a high possibility that it will go back down, making it a possible trading opportunity for us. A common mistake that a beginner always makes is drawing too many support and resistance lines on the chart, which confuses them a lot. Support and resistance is meant to simplify your trading, not to make it complex. This happens because beginners don't follow the right rules. Our first criterion that makes a level valid support or resistance is multiple rejections. For instance, when you see that at a lower level, the price goes down multiple times and bounces back, that price action makes it a potential support area. So, we will draw a support level there. Similarly, if you notice that the price goes up to a higher level multiple times and comes back down, it makes that specific level a potential resistance area. Now you might be thinking, this is fine when the chart shows clear past data, but how do we draw support and resistance where there are no multiple rejections yet? In such situations, you need to identify major swings. For example, if the price drops rapidly and makes a sharp turn upward, it creates a major swing low. Even though there has been no second test here yet, because the price aggressively rejected this level to go back up, you simply have to draw a support line at that swing low point. Rule number 2 is that a line can be both support and resistance. On a chart, you might have a clear resistance level because the price gets rejected from it multiple times. However, once the price aggressively breaks above this resistance level and later returns down to it, it might get rejected multiple times and push back up. This means that the line, which was acting as resistance before the breakout, flip-flops to act as support after the breakout. Our third and most important criterion is that the level must be close to the current price. You should always look for a support level and a resistance level near where the market is actively trading. You should not draw support and resistance levels that are very far away from the current price. Although those distant lines are technically support and resistance based on older history, being so far away means they are of no use to your day-to-day trading right now. We must draw support and resistance at levels that actually matter to us based on the current price, because too many lines cluttering the screen will cause analysis paralysis. Let's look at how to apply these rules. In a live scenario, we can draw a support zone because the price is rejected multiple times at a specific bottom area, and it is close to the current price. Directly above it, we can draw a resistance level. If you look closely at the history of that resistance line, it may have previously acted as support, flipped into resistance after a breakdown, and remained close to the current price. Important note: you should ideally use rectangular boxes to create zones rather than sharp lines. Support and resistance are not exact mathematical lines. They behave as areas or zones where buyers and sellers battle for control. In another example, you might see a clear overhead resistance level, where the price has been rejected multiple times near the current market price. Looking underneath the price action, instead of a horizontal line, we can draw an ascending trend line that connects the higher lows, acting as dynamic support. On a different chart, you might find a resistance level that formed because when the price was in a heavy downward move, it took a temporary pause to make a small pullback, establishing a support floor. Once the price broke cleanly below that floor and tried to come back up, it got rejected multiple times at that exact same structural level. This creates a highly reliable resistance zone that is close to the current price, while a fresh major swing low further down becomes our next potential target or support level. Basically, this is exactly how you can cleanly draw support and resistance levels to improve your technical analysis. If you do not know how to draw an ascending or descending trend line properly, you can click on our separate dedicated video to watch it. If this breakdown was informative and helped clear up your charting confusion, please subscribe to the channel. See you in the next video. Until then, best of luck and keep learning.